Today we're talking mortgage loans and the pre-approval process. I'm going to give you everything you need to know in this complete video, so be sure to stay tuned till the end. The Weeks team would love to help you with your mortgage financing in Louisiana, Mississippi, Alabama, and Florida. We want to be your loan officer. The mortgage pre-approval process can be scary, and I don't want you to be nervous. I don't want you to be intimidated. So I want to kind of go through what you can expect and what that process typically looks like. It's important to note that this will vary a little bit from lender to lender. So keep that in mind. Now, one of the first things that you're going to do to start the mortgage pre-approval process is an application. The application is done either they can send it to you and you can fill it out and send it back. You can do it by phone with a loan officer, or you can do it online. I do find that these days probably 95% of the applications are done online. Keep in mind this is a government form. We call it the 1003, Uniform Residential Loan Application. So we're not making it up individually as loan officers. I find that it can be a little bit confusing and a little bit overwhelming, so just take a deep breath, take one step at a time. You totally got this. Some quick little tips on the loan application: make sure you're putting your full legal name that matches your Social Security and your driver's license. Hopefully those match. If they don't, default to what's on your Social Security card. That's going to be the best. They're looking for a 2-year address history. Make sure you fill out a complete 2 years. A 2-year work history. Make sure you complete that 2 years. Looking to see how much you make, how much money you have between all of your accounts, such as checking, savings, stocks, bonds, CDs. They want to know if you're hourly, if you're salary, if you're base, bonus, commission, are you day rate, is it combination? Those things are very, very important. They're also going to ask you things about bankruptcies, foreclosures, child support, alimony, different things like that. So fill out that complete. Once you've got that application complete and turned in, they're going to pull a credit report. So be prepared for that. What lenders for mortgages pull is called a tri-merge. That means they're pulling all 3 credit bureaus. And we're not going to average those scores. People do get confused with that. They're actually just going to take the middle score. So let's say you have a 720, a 740, and a 698. 720 is going to be your score used when you go through that mortgage process. What are they looking for on the credit? Well, they want to make sure your name matches. They want to make sure the addresses match. They want to make sure that the employers match. They want to see how you're paying your bills. Are you paying them on time? How long have you had credit history? What percentage of that credit history has been good versus bad? How bad has it been? How many late payments? Is it just late payments, or is it collections? Is it charge-offs? Might it be judgments, which don't always show on the credit reports these days, but it will be found through title. So if you have a judgment, you make sure that you disclose that on the loan application. It could potentially break your deal, and you don't want any surprises. They're going to look at that credit score. They're going to look at the utilization, like what percentage that you're using on your accounts, and different things like that on the credit report. Then what they're going to do is they're going to combine that credit report with the loan application, and they're going to ask you for documentation to support the data entered. So you may need to do some type of explanation if there's an address discrepancy. You may have to provide other proof of documentation if there's maybe a name variation. They're almost always going to ask you for your most recent 4 paycheck stubs, consecutive, your most recent 2 months account statements for checking, savings, stocks, bonds, CDs. That's every single page regardless of what's on the page. They're typically going to ask you for your most recent 2 years W-2s. Depending upon the loan program, you might also have to produce your most recent 2 years tax returns as well. And you can also always expect a request of a photo ID. Now, let's say that you receive alimony or child support. They're going to want that fully executed judgment, and typically along with birth certificates for the children to make sure their age, to make sure that child support will be continuing for at least 3 years. Other things might come up as well, but that's just a generic list. There's definitely more involved if you're self-employed. It's not horrible, but the list will be longer. If this is your first time to the channel, welcome. Thank you so very much for being here. Please be sure to subscribe. Don't forget to hit the bell to be notified every time I drop a new video, which is every week. And also give me a like if you enjoy the video today. Okay, so let's assume that you've provided all of the documentation. It's been the most up to date, it's been the most accurate, it's been in consecutive order without skipping any months or pages. You're including all the pages, and hopefully you got it very, very quickly because that ball's in your court and everything's on hold until those documents come in. So let's assume that's all done. The next thing the loan officer and or potentially a processor will do is to go through those documents and make sure they can substantiate everything that you listed on that loan application and update items if you can't substantiate that. I'll give you a quick example. I had a borrower one time, and she put on her loan application that she was self-employed making $14,000 a month. And in addition to that, she made $60,000 in her W-2 job. Now, when all the documentation came in, she actually made $48,000 in her W-2 job, not $60,000. And in addition to that, she did not make anywhere, not even in the same galaxy as that over $10,000 a month that she listed for that self-employment income. So when those documents came in, those numbers were updated and her approval was drastically changed. But that's good because you want to figure that stuff out at pre-approval, not once you've already gotten a home under contract. So you've got the documents, things are looking good, the loan officer or processor reviews those, and then ideally they go ahead and issue the pre-approval for you. Now, what's that pre-approval good for? Well, when you go to make offers on a home, especially in the market right now, the seller wants to know that you're pre-approved and you've got a solid pre-approval and you're very likely to make it to the closing table above maybe the other offers that they're going to be looking at. That's why it's really important to get your pre-approval before you find the realtor and before you start shopping for houses, because remember the borrower I just referenced, I mean, if she had started looking at $350,000 houses, she might have ended up at $200,000 houses when the numbers were validated. And that's a big difference. And that can be really disappointing. So you don't want that to happen to you. So to simplify, what are some just easy things to keep in mind when it comes to the mortgage pre-approval process? Be honest, be transparent, don't overestimate or over-exaggerate your income or your assets, not in either one of those instances. Produce whatever it is the lender's asking for. Produce it quickly, accurately. Be compliant, be friendly, be cooperative. That loan officer, that processor, that underwriter, everybody wants you to get this home. We are all on your side, and we're all just doing our jobs and following regulation. So if we're asking for something, it's not to be annoying. It is just because it's what's required to get you to the closing table. If you follow these tips and tricks and now you know what to expect for the pre-approval process, it's not so bad. It's not so scary. It's totally something that you can do. And I hope this helps you on your path to homeownership. Thank you so much for watching the video today. I hope you enjoyed it. I look forward to seeing you in the next one. Thank you for tuning in. I hope you enjoyed the video. Whether you're moving in 9 days or 90 days, give me a call, shoot me a text, or send me an email. I would love to be your lender. My team would love to help you if you're in Louisiana, Mississippi, Alabama, or Florida. If you're in other states, I can't help, but I hope that this information has been really helpful to you. Thank you again, and I'll see you in the next one.